So, good morning, active traders, and welcome to our Trading Week Ahead live broadcast. I'm a real money trader, having traded millions and millions and millions and millions, but not billions like Kramer. But I've traded millions at least of things, and I've learned a lot over decades, and wanted to get us underway with a lot of authentic P&L proof of real trades I do. Come on, there we go. Okay, live broadcast, here we go. So welcome to Trading Week Ahead. It's a real pleasure to have so many of you here this morning with us. As always, all information is for educational use only. Let's go ahead and take a look at our markets. And a big thanks and a shout out to all 5,800 of you who have registered for this morning's event. We're coming up on the 6,000 mark, so always great to see the #1 most popular webinar series in the history of the industry. Thank you for making them a success. Let's get underway. And what the heck's going on? I'm trying to go short again the market. I've done so unsuccessfully on numerous occasions during the earlier pullbacks we've seen with at least 2 red candle days in a row, but maybe the third time's the charm. We'll see which way things are running. Market's currently 3160 resistance. This is our S&P 90-day candlestick chart. And I don't see any particular candle patterns. We got a little bullish support here from the lower tails, but 3 green days in a row, followed by a pullback day yesterday after Thanksgiving holiday. Happy Thanksgiving to all of you. I hope that you have things to be thankful for, like lots of winning trades and lots of money, or at least the passion for excellence to learn how to do it the right way, and the intelligence and the wherewithal to roll up your sleeves and learn. And because you're all here this morning, and wow, a big turnout. Thank you all for being here. I won't be able to answer all the questions, but I'll do my best. Let's take a look at what's hot. First of all, starting off with a couple of day trading charts that I alerted my members to. That's the S&P. So I was going long in the inverse instruments. I bought some VXX yesterday. I bought some TVIX, even though it's doing a 10-for-1 split Monday. And I also bought some SOX. I think I bought some SOXS. I know I got some VXX. Anyway, great rockstar charts yesterday. My favorite one is Clovis Oncology. Not only is it an outstanding swing trade candidate, on the 90-day chart you can see Clovis slowly, steadily, unlike a lot of the medical industry instrument charts that spike up and right back down again. This guy's been a consistent, large percentage range uptrender, right? It's tripled in value over the last several weeks and provided an outstanding trading opportunity for anyone who is smart enough to listen to me in my calls. Or even yesterday, so that was great for swing trades. For day trade, it's also a great chart. Yesterday, I called it long for my members. Pre-market, what I call my answer key. Unlike any other live trading room in the world, I give specific entry triggers to use in market for educational use only. These are not recommendations. This is to learn chart patterns. Anyway, I said at 8:45 when I first logged in, we want to go long in Clovis if it breaks 1330. And not only did it go over 1330, it went over 1430, and then 1530, and then 1630, to infinity and beyond, or so it seemed at the time. And congratulations to all of you who are live room members who took that alert and profited handsomely. Boom, flawless victory. All right, now, trading combat. Get over here. I'm a former gamer, current jazz musician, but former gamer. So, and unlike Mortal Kombat, we've got trading combat. Anyway, now this is another one that's more difficult to trade, but I alerted my members to go long ahead of time if it broke 370. Unlike other rooms where guys are just, putting on trades and claiming to be in a position and not giving anyone a heads up ahead of time, I told my traders we want to go long in this guy pre-market if in market it got over $3.70 per share. And so for all of my traders who are successful, my hat's off to you. It ran up 3 points from 370 to over 3 points to 470, 570, 670, and it stalled out at the whole number, which is a good exfil. You're always looking in your trades to exit right under whole numbers, and I've taught traders that for the better part of 20 years because it works. And so It's a really good strategy to sell, like the 0.80 cent mark right under whole number. Anyway, the point is, before the market opened, I alerted my members to go long at 370, and that would have worked out just great. Another good chart that one of my members had asked me about that I posted an alert for was this guy, PTON, a little higher priced, but also really nice momentum runner that ran up 3 points from 32.60 to 35.60 with these little pullback windows along the way. From a price action standpoint, what you want to look for is repetitive patterns both on a swing trading as well as a day trading chart basis. So for example, the pattern here is it did a little shake and bake near 33.40. Does everybody see that? It stalled, pulled back, and chopped around near the 0.4. For whatever reason, the algorithmic trades, the high frequency trading algos that were punching this guy up, did the same thing up at 34.40. And sure enough, 35.40 was near the exact top. So for whatever reason, the whole numbers weren't the strategy in this one. It was the 40 cent mark. And as a price action professional trader, that's what I'm looking for, is repetitive clues that help me make more money with the charts, right? The clues are there. If, like, I don't have my big ass magnifying glass, but a Sherlock Holmes type magnifying glass, the patterns are repetitive if you know what to look for. So this is what my live trading room members get at tradingtheopen.com is I pick the top, 4, 5, 6 charts on both stocks and ETFs. Unlike other rooms that only look at stocks, which is stupid, you want to also trade instruments that have good volatility in the ETF space as well. Like Nugget yesterday, one of the gold ETFs. Nugget was a big rock star. Do you think you could have made some money if you traded this yesterday for either a day or a swing trade, right? We had a bullish cup here right near the 26.5. Resistance R1 at 26.72 or so. Ran all the way up to just under the whole number 28 to 27.80 before the end of day. It was a shorter day yesterday, right? We closed at 1. But a really nice multi-hour breakout in progress. And as a trader, it's fine to turn a winning day trade into a swing trade, or at least take some early profit and be in on it. But what you want to do is close out a trade at the first sign of trouble. So for example, if you're trading LK, which is a guy that ran from 21 all the way up to 33, we didn't see a bearish shadow other than the fact it was red, but a loss of 2 red candles in a row. That's a price action momentum exit signal that I've trained traders in for years. About 12 minutes left. Thanks to all for being here. If you see 2 red candles in a row, either on a minute by minute basis or whatever basis, a loss of the second red candle is a change in polarity or change in the trend of that instrument. And so for that reason, I will usually scale out of, at least scale some of it out, if not close the entire position on a loss of 2 red candles, whether it's the daily candles like this guy or the 1-minute candles or 5-minute candles on a day trading chart. Another good chart that I alerted you folks long to was Ameritrade back here where I was trading it. I got out too soon and didn't ride it all the way up here, but congratulations if you did. We may well see a continued move in Ameritrade. It just merged with Schwab, so it'll be interesting to see how that all works out. But look at the run. What was a sign that a long would have been right? Just as here's a quick tip that I haven't covered before, but because I'm focused on teaching you correct exit methodologies, visually using your chart patterns. But from an entry trading methodology too, if you see after a big drop or a gap down like this guy, if you see 2 green candles on an uptrend, a breakout above the high of the second candle, which in this case was right there. Does everybody see those 2 green candles? After a big epic failed drop, if you see 2 green candles in a row, with the second green candle being higher, that's critically important. The second green candle is above the first green candle. The long signal is right above, 20, 30 cents above the top of the second green candle for a day or swing trade. And this would have been really good for a swing trade if you'd done that and bought at 35 or even 36 and it ran all the way to 52. So that's one that I alerted my members to as well. You also want to have a very intelligent, rules-based approach to trading. You know, back when I was a statistician for the Ford Motor Company, we had millions of dollars of production inventory at risk when you're in a live production environment. And, you know, a lot of the plants run 24/7, so you don't have the luxury of time to go off and run a lot of experiments and everything. You've got to make real-time adjustments to manufacturing parameters, things like the tolerance, how tight or loose critical control points are in the manufacturing line, without having people's eyes glaze over and manufacturing quality engineering talk. A lot of that applies to trading too, because you're looking at developing a simple to use, easy to understand price action based entry and exit methodology based on the real-time data that's in front of you. Where a lot of traders struggle, and all the tens of thousands of traders I've helped over the last 21 years, a lot of folks genuinely struggle with the decision making of the data that they're presented. You know, you see a set of data, you see a chart that's starting to break out to a new high. Do you trade it at all? How many shares? What's your initial stop loss? Where's your exit target? You have to at least kind of eyeball or sketch out a game plan ahead of time for those charts. One of the things that's helped me become extremely successful in my winning trades is that I'm very selective about which charts I want to focus on. Now I want to play the charts where I've got an edge, or I've got the advantage. Kind of like when I play in poker tournaments. If I'm late position and bad guy puts me on a high pair, you know, a top pair like queens, kings, or bullets, and in fact I've got trips or even an inside straight that got filled, and I'm playing it though as though I only have a top pair, I'm going to take all his chips, right? Which is a lot of fun. Of course, they cuss at you sometimes when you take $1,000 of chips. But as a trader, you've got to look for relationships between which charts are strongest and which ones aren't. So, like the poker analogy, you've got to start off with strong hands, and preferably a stronger hand than you normally would play. I learned the hard way. If all you got is aces and somebody's playing against you to the river, they got you beat. I lost a big pot at Bellagio once when I was in seat 4 and Villain was right ahead of me in seat 3, and I shoved with pocket aces, but he had a small ball straight, and so took my chips and I had to leave. But I said good hand, you know. Anyway, who can tell me the bearish reversal sign in CVS? It's been a really nice momentum runner from 60 to 77, though the sevens don't seem to be lucky enough for this. I generally don't trade stocks this expensive, but I remember a certain talking head on TV had said this might be a buy. And actually he was right from the time he mentioned it a couple of weeks ago. But anyway, what's the bearish reversal sign in this CVS chart? We got just a couple of minutes left, so type in your answers. This is one of the audience participation portions of today's broadcast, live in front of so many of you. What's the bearish reversal sign in this? It says you might want to get out of Dodge and CVS, at least if it loses at 74. Hint, it's a bearish candlestick pattern. And learn candles from Steve Nissen exclusively. He's the only guy who knows the depth that you need. None of his copycat competitors, just like I got copycat competitors. Right, Murray. Right, D, there's 2 reds, specifically Morale, Don, Murray, Dennison, Phil, Ned, Mark, Ahmed, William, Peter, Morale, Wendy, Hussam, right? Right, Vincenzo. I love Mortal Kombat. I played it from the beginning, back in the early days. Yeah, it's a bearish engulfing, right? You got a big bearish red candle that's wrapped around the previous candle pattern. And thanks to Steve Nissen for that. You got to learn from real experts, whether it's Steve Nissen for candles or myself for the momentum plays or, there's so many good experts to learn from out there. Try a few and see which one resonates best with you. I like to use kind of a common sense approach. The main thing though is, okay, you spot the pattern. Oh no, what's the price that proves a long wrong? It would be a loss of this support. Did we lose that support? We did. So you should be out of this thing, right? Next thing you know, it may gap down here and go down, and oh, I should have got out up here and against that. Anyway, when you see those signals, one of the missing links, hopefully you are the missing link, not, maybe you're not the missing link, but one of the missing links is the recognition of a signal to actually making a trading decision. And the way to make trading decisions in terms of exiting a trade, which is your most important decision, entering the trades are easy, right? It's like going into a nightclub and talking up a few lady friends or whatnot. That part's easy. It's the showing them the door the morning after that's kind of tough. That's tricky. As a trader, the fellow players in the house will know what I'm talking about, right? Don't hate the player, hate the game, right? But I'm now 21 years happily married, but you can take the player out of the game, but you can't take, anyway, the point is, as a trader, it's often kind of if you ever had that experience, it's kind of a missing link between recognition of the pattern and then actually taking the trade or making the exit decision. The way to make that an easier decision, I have found, is to scale in and out. So maybe put a hard stop at, say, 74 on half the position and sell the rest at 73 or something. So that way, if it does come back to life, I'm not out. But if that was in fact the reversal sign that holds and it drops down here, I minimize the damage. So split your trades, kind of ladder in or layer in or position size or scale or whatever you want to call it, into 2 chunks. And I found that to be a very effective strategy. So it alleviates my FOMO, my fear of missing out. Let's say, because frequently, you're in such a great chart and it pulls back and you get out and then it runs up without you. Like Homer Simpson, you go, dope, and that's frustrating as fudge. So, excuse me. So what you want to do is scale in 2 blocks in your trade. So if I'm in, say, 200 shares, I sell 100 if it loses 74, and the other 100 if it loses 73, right? Or if I'm trading an inexpensive instrument, not that cheap, but let's say I'm trading, Clovis and it gets under 1250. Let's say I'm in, say, 400 shares, I would sell 200 at, say, 1230, and the other 200 if it loses 1130. Does that make sense? That's one thing that I think can really help you as an active either day or swing trader. It's how I manage virtually all my positions. Is very seldom do I do all or nothing trades. It's much more in chunks of 2. And nowadays with 0 commissions, you have no reason not to do that. You don't save money on commissions by making your trading decisions all at once. I highly enthusiastically recommend both Ameritrade and Fidelity are my 2 top choices for American brokers. Interactive Brokers had been my favorite for over a decade, but you're not getting their whole platform now, the Pro platform, for free. So sadly, I have to instead move away from IB, and I've been trading pretty much exclusively on my Fidelity platform this past year, and it works great. So I highly recommend them. Or Ameritrade is great too. Ameritrade has outstanding charts. So if you don't use eSignal or some dedicated chart platform like eSignal, or Metastock is excellent as well. Ninja charts are great. There's a handful of great charting software out there. TradeStation's good too. If you're not using a dedicated charting software platform, I would highly recommend using Ameritrade, because you get the outstanding Thinkorswim platform with no commissions and no minimum open. I called the local office here in Colorado Springs just to double check, and they said, yeah, you could open an account with just $200 and you still get Thinkorswim charts. I'm like, wow, what a deal, such a deal. Anyway, what's going on with our markets? What's gonna head up next? I'll tell you what I did. I always put my money where my mouth is. Because the market was a red day yesterday, this is the S&P yesterday. It was a bear cup drop into support here, and we lost the previous day's low, so that's a bearish reversal pattern. I put on small share positions. I'm in, I don't want to say, maybe just a few $1,000s worth of TVIX and SQQQ and what else? VXX, UVXY. I'm in the VIX instruments. I scaled up in those yesterday because, and I could be wrong, I've been wrong before, But instruments like VXX look way overdone. And because we have 2 green candles in a row, that tells me we may get a bullish reversal. Even though we don't have a hammer, we don't have a bullish engulfing, and these are really insignificant. That does not generate a long signal yet. And that's why I put on small size. I'm under a couple hundred shares in each of VXX, UVXY. I'm in 300 TVIXs. I scaled up in that because it's going to do a 10-for-1 split on Monday, and other instruments. So anyway, lots of upside if and when the market drops. It usually goes down much further, and I've been scaling out of these guys on the way down, but now I'm starting to scale back in because we're starting to see a reversal. What I want to see is a volume pivot, or pivot on large volume. My colleague Mark Leibovich, really smart guy, came up with a strategy called volume reversal, and it's a smart one. And thanks, Mark. He's a good guy. I always talk with him at the Money Show events when I see them. If you see big volume, large volume on the pivot, so in this case a green candle on an up day, for example, I'd want to see volume up at say 40 million. That would confirm a long reversal in the VXX inverse VIX instrument, right? So these go up when the market goes down, and vice versa. So be on the lookout for those. The gold sector was up yesterday, which is contrary to the market, or an inverse signal, and the VIX. So both gold and VIX were up. The standout sector has been biotechs and pharmaceuticals, right? That's our NASDAQ biotech sector. And look at that sector chart. It is kicking the S&P's rear, as I've been calling it long for quite a while for you guys. So anyway, thanks so much for being here. I do appreciate it. No big sales pitch or anything. I like to give value first, and thanks to all 5,800 of you for registering. I do appreciate the enthusiastic support for making this #1 in the industry. Just a reminder, I do have a quick 20-second pitch to get a year of support with all my alert services in the live trading room 6 days a week. I do have that available at trademastery.com/all access, and that's only $9.97 a year. And by the way, I'm including a 30-minute coaching phone call for anybody who registers by Sunday. And I will retroactively include that for any of you ordered as far back as May or June even. So any of you who have ordered all access during the last 5 or 6 months, you can also get me on the phone for half an hour in January or February. We'll schedule a time early next year, first quarter, and you can get me on the phone and ask all your questions, and we can pull up charts together. And you're getting the half-hour coaching call, plus over 390 hours, well over 400 during the upcoming year ahead. And it's only $9.97, which is a bargain compared to my live seminars. So anyway, do register for that if you're not yet a member. Let me close that window down. And I wanted to wish you all the very best, right? We've got some outstanding charts and opportunities to trade. The market may be going up or down. Let me ask a quick last question before I wrap up. I mean, the correct answer is, I don't know, I'll wait and see. So we don't predict, we react, right? That's what even I posted that on Instagram. But if you were to predict, do you think the odds of a pullback, let me ask you this way. How many of you agree that the odds of a pullback or a market reversal are now starting to escalate the further the market keeps running up? That's the biotech. Let's take a look at this. But how many of you think that we may be due for a pullback at some point in time? Hint, there's a technical clue. 4 red days in a row. They're all kind of bullish hammer type days, so it's lower tail, so it's still kind of red, but yet still bullish, and that's why we kept going up last week a bit. But how many of you think that we may be due for a pullback or reversal sometime soon? About overdue for pullback, right? Deanna, Eric, John, Ahmed, Mike, Ken, all these answers scrolling by. Wow. Hey, you too, Long. Have a great weekend too. All right, Deanna, yeah, biotech sector, Golden Cross. Hey, you're welcome, Mark. Thanks, man. Agree that steam's running out. Yeah, overdue for a pullback. I agree. But that's kind of like famous last words. I remember back in the 90s. I don't know how many of you remember trading, those who were back in the fraction days in the 90s bubble. It's like, surely it's got to stop sooner or later. But no, it kept going like the Energizer Bunny. It keeps going and going and going. So there's a price that proves the trade right, and there's a price that proves the trade wrong. So make sure you've got those firmly in mind and orders set accordingly to profit from them or minimize stop loss costs. But we're starting to see some weakness with these 4 red days here. Bullish lower tails, so from a technical standpoint, we're still in an uptrend. But if we lose, hint, here's a quick tip. If we lose this previous cut pattern high under, say, 3130, watch out below. The next major support would be down here right around 3090 under these tails. So let's call it 3080. So S1, my official S1 call is 3130. That's a place to start scaling out of open long swing and position trades and considering going long in the inverse instruments that go up when the market drops. And a 3090 there, right under those 3 tails, would be a confirmation of a break in the trend, right? That would be a bearish reversal sign. So keep an eye open for that. I wanted to wish you all the very best. You've been outstanding. Thank you for being here. Appreciate it. And exactly right from John. China did not like Trump signing the Hong Kong support bill. I'm just like, WTF? You're trying to turn things around with mainland China. You know, I've dated a lot of girls from China and very strong. I don't have time to talk about all the details, but the point is, it's a very strong culture. And if you sit there and slap them in the face by signing with Hong Kong, your odds, powers that be in the White House, probably aren't going to get a China trade resolution anytime soon if you're off doing stuff like, you know, siding with the colonies out there. So as right as a decision might be from a moral and ethical standpoint, from a trade management standpoint, probably not a good idea to piss off the leadership in China by signing a anti-China establishment or siding with the anti-China establishment folks in Hong Kong. So that makes the odds of trade resolution with China went down significantly. That may be a catalyst for market sell-off. So if I was a talking head, that's what I'd be talking about. And you're exactly right. I dated a girl once from China, from Hong Kong, called Lily, but she was great. I digress. I've dated hundreds of you, and I've traded tens of thousands. I'm a numbers guy. It's all about the numbers. Put the odds in your favor, whatever you're doing in life. Take care. Best wishes. Sign up for my All Access Pass. It'll be worth it. And I will see y'all same time, same channel next week. Until then, trade smart, trade with passion, trade with excellence, trade with itty bitty stops, and take a lot of shots. And let's go get them. Take care and best wishes, folks. You've been great. I've got swing scans coming up in a couple of minutes here, so I've got a jet. Bye, everybody, and trade well out there and make some money.